Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. Before starting to invest, it's really important to do research yourself to make sure the decisions you're making are right for you. One of the things I looked at before I started investing was a stocks and shares ISA, so that I got a good understanding of what they were and how they worked. In today's video, we're going to take a look at the different types of ISA, especially the stocks and shares ISA, and talk about the benefits of them and why they're so important to consider when you're starting your investing journey. Then we'll take a quick look at my own Vanguard stocks and shares ISA in portfolio update number 2. Before we look at a stocks and shares ISA, let's get an understanding of what an ISA actually is. An ISA, or individual savings account, is an account that protects your money from the taxman, meaning that any interest, capital gains or dividends you earn within that account cannot be taxed. In the year 2020 to 2021, everybody has an ISA allowance of £20,000. This then resets at the beginning of the new tax year, so you can then invest or save another £20,000. Currently, there are 4 different types of ISA, each with slightly different purposes. You've got a stocks and shares ISA, an innovative finance ISA, a cash ISA, or a lifetime ISA. As I say, each of them have slightly different restrictions and reasons for their use. Today we're going to concentrate mainly on the stocks and shares ISA, but I'll put a link down below if you're interested in starting any of the other ISAs. In any given tax year, you can open and pay into one of each type of ISA, meaning that essentially you can have 4 ISAs open at one time. However, you cannot have more than one type of each ISA open, meaning if you've already got a stocks and shares ISA with one platform, you cannot then go and open another stocks and shares ISA with a different platform in the same tax year. Because of this, it's important to get your research in first and make sure you're happy with the platform you decide on before you start investing. As if you're not and you want to change at a later date, you may have to invest outside of this ISA wrapper before the beginning of the new tax year. Investing in a stocks and shares ISA is an excellent way to keep all of your money, and it protects all capital gains and dividends from the taxman. Capital gains can be anything from the sale of a second home to the sale of stocks and shares, or even the sale of jewellery. In the year 2020 to 2021, you're allowed to make a capital gains of £12,300 before having to pay capital gains tax. If you're not investing in a stocks and shares ISA, any capital gains that you earn over £12,300 will get taxed. Essentially, you're paying and getting taxed for the risk of investing, which means you're losing money and not keeping all the gains that you really deserve. Equally, by investing through a stocks and shares ISA, you will not have to pay dividend tax. By reinvesting the dividends that you make, you're ensuring that your investment springboards and continually grows over time. Therefore, by investing in a stocks and shares ISA, you will ensure that you keep all of the dividend that's paid to you. You will not get taxed on it. If you decide to invest outside of a stocks and shares ISA, again you have a dividend tax allowance, meaning that you can earn up to £2,000 of dividends per year before you get taxed on them. While at the moment £2,000 in dividends in a year might seem like a distant dream, by continually investing over time, I hope to get to a stage where this is a reality. And there we have a really simple explanation of the purpose of a stocks and shares ISA. The key benefits, like I've said, are to protect your money so you keep all of what is yours. You will never pay capital gains tax and you'll never pay dividend tax by using a stocks and shares ISA, which will help your investment to grow over time. While I don't see any major downsides of a stocks and shares ISA, you could argue that only being able to invest £20,000 a year is a potential downside. For myself, £20,000 a year is more than enough, but I know for some investors out there, people invest a lot more than £20,000 in a year. And the other downside that I can think of is that for some platforms you have to pay for the privilege of using their ISA. I do also have a small investment account with the app Freetrade, which I'll look at in future videos. However, because I already have a stocks and shares ISA open through Vanguard, and you can only have one stocks and shares ISA that you pay into per year, the account that I have with Freetrade is just their basic account, which is obviously free. I use this account to invest in individual stocks and shares, something that isn't actually offered on the Vanguard platform. In the future, if my free trade portfolio grows to a point where I may have to pay either capital gains or dividend tax, I might consider joining my Vanguard and my free trade portfolios together in one stocks and shares ISA. While this is something I'm not going to have to do for quite a while, it's good that I'm looking into the future and considering what are the potential routes that I'll need to take. At the end of the day, the last thing I want to be doing is paying capital gains or dividend tax on my investment, because I'm taking the risk of investing in the first place. I don't want to be giving that money away. So that's enough about stocks and shares ISAs. Let's hop onto my Vanguard portfolio and have a look how my own personal stocks and shares ISA has progressed since the last video.
So here we are back inside my Vanguard account. As you can see, not a whole lot has changed since the last video, as there have only been 2 days trading. That said, you can see the value of my ISA has improved from £2,700 to £2,723. This has changed my rate of return from negative 4.2% to negative 2.5%. If we click through to View Performance, you can see that Your Investments Return to You tab. Here you can see that my investments have returned to me this year from negative £36. Again, this has improved by about £23 since the last video. If we click through to the Investments tab, we can see the total performance of all of my investments. One of the things to note here is how poorly the FTSE 100 ETF has been performing. This is partly due to Brexit and everything that's been going on around that, and partly due to the virus as well. As you can see, the FTSE Emerging Market and the FTSE Developed Asia Pacific ex-Japan have both been performing quite well lately. The reason for this is because I bought them during the main dip, and therefore they've had greater to climb than the rest of the portfolio. This really demonstrates the importance of pound cost averaging throughout a recession or throughout a market dip. I have been doing the same thing for all of my different funds. However, the FTSE 100 was hit particularly hard. By clicking on the Month tab, we can see the breakdown of my monthly investments. If you remember from the last video, I'd only invested £50 so far in the month of May. Throughout this month though, you'll see that £50 steadily increase. Finally, we'll go back to the Graph tab to see how that looks on the graph. We'll scroll down, and then because the part of the graph we're looking at is right at the end on the right hand side, we'll also zoom in to minimise down the area that we're looking at. So you can see, since the last video, where we were at £2,700, that's slowly increased. Obviously through the weekends nothing's happened. Then on the Monday, that's jumped up, and then on the Tuesday, it's gone up a little bit more. As I've said in my previous video, my investment horizon is fairly long term, so I'm not concerned about these small changes. However, it is interesting to keep track of. When filming this video on Wednesday, you can see that the markets have taken quite a dip this morning. Using the Stocks app on my iPad, I keep track of all the ETFs that I currently invest in, as you can see down the left hand side. From this you can see the change in the value of each ETF as shown in pounds and pence. By tapping the screen, you can see the percentage decrease from the day as well. The graph on the right hand side then shows you the week, the month, or the daily performance on a graph. As you can see, each of the ETFs this morning are down around about a percentage point to 2 percentage points each. However, while that's down for the day, you can see that for the week, the trend is still upwards for all of the ETFs that I'm invested in. The main reason for the reduction in value this morning is due to the release of statistics showing the contraction of the economy over the last 3 months. This was the fastest paced shrink since the global financial crisis of 2008. While lockdown restrictions have been reduced and some people are heading back to work now, the Bank of England has warned the UK economy is likely to suffer its largest recession on record. Like I said earlier, I'm a long-term investor, so I'm not too concerned about these dips at the moment. It gives me an opportunity to pound cost average through the dips and then back out the other side whenever that may come.
So that's just a quick look at my Vanguard stocks and shares portfolio in portfolio update number 2. If you have found this video useful and you're enjoying watching my portfolio updates, please feel free to like and comment below and subscribe to the channel to get notifications on when I upload the next video. Hopefully this video has helped you see why it's so important to invest through a stocks and shares ISA. You want to keep as much of your money as possible. So that's the end of the video. Once again, I hope you have found it useful and you've now got the confidence to go out there and decide whether a stocks and shares ISA is the best option for you. I'll see you in the next video.